So crypto exchanges, more than any other cohort of the industry, are in an era of deep changes. Those of you who watched the market making panel yesterday, you probably heard some outrageous statements like less than 10 exchanges are actually profitable, or questioning even the mere definition of exchanges as well, exchanges. So in this period of transition, fierce competition, and a general soul searching by the exchanges, it is important to sit down and make sense of all of this. For this cause, we have here Vicente Ortiz Alonso, managing partner at Vicente Ortiz and Company law firm, who will present the panel and moderate. Please.
Thanks everyone to be here. We try to make this panel as much entertainment as possible, and also engage the participant, the audience, to go to the Q&A at the end of the panel. I'm gonna start with, I'm gonna give 2 minutes to all the panelists to introduce himself. First is gonna be Doron Rosenblum, the Director of Marketing of eToroX. Please, Doron.
Thank you.
You're welcome.
Yeah, should I start?
Yeah, sure.
Tell me the rest of the guys on the stage, no?
Storytelling. People wanna love it.
Good.
To know
so, welcome to the event, everybody. I'm happy to be here. And eToroX Group, as some of you may know, is the leader when it comes to online trading. We've been around for 12 years. We have 10 million active users. We are managing tons of money for people. And we are heavily regulated. We have offices all around the globe. We started in Tel Aviv. Now we are in Shanghai, Cyprus, England, New York, Australia, Gibraltar, and so on. eToroX is responsible for executing the blockchain and crypto operations for the group. The group believes that blockchain and crypto will change the finance industry, and they've decided to launch a special operation just for that. So this is what we are doing. We have already a few products in the market. We have a crypto wallet. We have a crypto exchange, which will be presented later. And we are also operating around the globe.
Okay, thank you. Our next panelist is Daniel Skowronski. I don't know if I pronounce okay or not, from DX.Exchange.
How you doing? It's Daniel Skowronski, or Skowronski, if you want to, I'm Polish. So DX is a digital asset exchange, and we're regulated in the EU. We're known mostly for our technology partnership with Nasdaq. We love to innovate new products on the blockchain. We're really always trying to bridge the gap between the old world and the new world. So for an example, we launched the first digital tokens as far as stocks by tokenizing Apple shares and Tesla shares earlier this year. And so we always are trying to look at ways to bridge that gap. And we're a crypto and digital asset exchange.
Our next panelist is Miha, is the head of business development from Bitstamp.
Oh, is this on? It's on, okay. So I'm Miha. I run business development at Bitstamp, currently the longest running Bitcoin and cryptocurrency exchange in the world, the largest Bitcoin exchange in Europe, one of the largest ones in the world, and just like eToro, I would say for this industry, pretty heavily regulated in Luxembourg, New York, and we also span and try to build a bridge between the traditional and the crypto economies. But unlike a lot of competitors, we've been doing it for the longest. So that's our story and our mission since day one.
Thank you. And our last panelist is Fabio Canesin. I had a great conversation yesterday at the party. Say, Vincent, we are not a change. We define ourselves more like a fintech platform. Our change is our first product, for sure. You want to introduce?
Thank you, Vicente. Gracias. So my name is Fabio Canesin. I'm one of the 5 co-founders of Nash. So as Vicente said, Nash is a fintech company. And the first product of this company is what we call non-custodial exchange. And this is maybe something that would be interesting for us to discuss during the panel, because there's decentralized exchange, non-custodial, so many names, right? Nash was funded by a team of veteran blockchain developers and people who has been around as long as Bitstamp. And we decided to do our own project when we felt it was time. So the 5 founders founded Nash, which was called Neon Exchange before. And the goal is really to bring non-custodial solutions, so blockchain native solutions, to the point where they can be used for mass adoption. And the first challenge we took on was a performant non-custodial exchange, which has been a problem in the industry since we have been around. So it's forever problem of the industry, I would say. We have been conducting beta opens for almost 2 years, and we had a community beta for 2 months, just a few months ago, approaching public availability. And we also did the world's first public security offering on the blockchain. So when we talk about bearers instruments on the blockchain, we did the first one, and that was a huge win for the industry that we try to push forward.
Thank you. Okay, I'm still remember back to the 2013, 2014. I still remember what hard was to open the wallets, the onboarding process, and the changes. And my question is, guys, you can start with Daniel. What are the crypto changes doing regarding user experience and new products, the platforms?
So in terms of new products, I think it's kind of our responsibility as exchanges to offer the best user experience and the widest available products safely and securely. As I mentioned earlier in the introduction, we always look to try to innovate. So since you mentioned products, one of the newest products that we just launched yesterday is a new type of token called SLTs, or smart leverage tokens. Everybody's talking about margin trading these days. Everybody's trying to add it. But what we've actually done is we've come up with a way to actually embed the margin into the smart token or smart contract. So you can actually now trade margin on a token that's on the blockchain. So, I think it's things like this, whether you're digitalizing assets, whether you're creating wallets, whether you're creating a new user experience, whether you're doing a better onboarding, it's really important for the exchanges to follow the regulations and to kind of bridge that gap. And I think in terms of regulation, it's really important for us to just keep innovating. I mean, if you look at Libra, technically when you look at what they did, it's very similar to what Stable had done already. So I think the old school companies, they're not really innovating. It's up to us that come from the industry, whether you're old time into the industry or you're newer like us, you need to keep innovating. I think this is where the innovation is going to come from.
Okay. Doron? Yeah.
Well, I think that a few people mentioned bridging the gap, and I think this is one of the challenges. When you're speaking of exchange, basically exchange is not easy to understand for most of the people, right? People go to their bank and say to their banker, get me a few shares of Amazon or get me whatever, and they did it for them. Now, when you go to an exchange, which is one of our products, you need to make sure that the experience is easy enough for them to trade. So it's a new terminology, it's a new user interface. There's a KYC process, which is not easy, and we need to make it as easy as possible. And for us, for example, just a week ago, we launched a new KYC process. So we understood that what we had was too complicated, that people didn't survive the whole journey of KYC, and we made the decision that while we are maintaining the regulation, we are maintaining the compliance with the regulation requirements, we make this journey easier. So this is something that we are doing all the time, and our responsibility is to make it as easy as possible. And this is one of the things that will allow the market to adapt these technologies. There are many things that will make it happen. This is one of them. Make it accessible, make it approachable for people.
Miha, what's your opinion?
Yeah, so Doron has a good point. Crypto exchanges are experiencing a lot of challenges because, regulated or not, we need to follow KYC and AML rules. There is no way around it. And if you want to open a bank account, you kind of anticipate that you're going to have friction on the way. for Bitcoin exchanges, friction is something we need to remove from the first second someone comes to the site, because otherwise the customer is gone, or they'll just quit, or whatever reason. So first, we have a much greater emphasis on the user experience itself. And secondly, and the most important one, is that user experience has to be scalable by orders of magnitude. Because a bank or a traditional financial account opens a couple of dozen or 100 accounts a day, let's say. A cryptocurrency exchange opens a couple of hundred accounts every day. And on a parabolic price action events like December 2017, Bitstamp was opening 150,000 accounts every single day. And that means that we had to open all those accounts and verify them according to all the standards that apply to the traditional industry. And this is something that I think no real traditional financial institution can compare with when it comes to Bitcoin and cryptocurrency exchanges.
Fabio.
I think that we need better user experience. So that's every user, everyone who enters in crypto knows that. So it's not a question of debating. But from Nash point of view, we believe that new technology can bring new user experience. So when you think about the phones that everybody's holding, if there was no capacitive touch technology, you wouldn't have touch, you would have a keyboard still. So what we are trying to do at Nash is push the technology and do a process that we call user-centric design. So we develop new technology and we test with the users. Is this better than what you're used to? And if it is, we push forward. If it's not, we drop. So we have been in this technology iterative process for a while. And I think this is the only direction we can take in the industry, is continue to push the technology farther and not just build better interfaces for the technology that we have now.
Okay, you three guys point regulation. The word even sounds scary, regulations. And there is some concerns into the customers. There was some news, scary news regarding the financial tax force guidelines requiring a change to collect information for the customers. And my question is, will regulation hamper or block exchanges activity, or let crypto better credibility?
So regulation is not easy to do. eToro Group and eToroX invest tons of effort, money, people, time to be regulated. When we are multi-region regulated now, and we will continue to be regulated, and the reason is very simple. We believe that the way to success goes through regulation. Yes, you need to have a good product, you need to have good prices, you need to have good customer experience, but at the end of the day, we in eToro don't perceive ourselves as an online company. We're a financial institution. As simple as that. The various products that we have, regarding all of them, we are a financial institution. And when we come from this perspective, from this point, from this angle, we are a financial institution, then we need to embrace regulation. And actually, we work with many regulators, and we have a very good cooperation with them. And as people know, not everything is already known. There are not always practices when it comes to crypto, to blockchain. Not everything is clear. So what we do is we work with the regulator to find the right solutions for the products and the approaches that we want to launch. And we see at the other side people that want to go forward, that want to enable this technology, that want to enable this change in the financial industry. And as I said, it's not easy, but we embrace it. And I think that the whole industry, the whole domain of crypto and the blockchain is moving slowly but very firmly towards the mainstream. We are not on the sides anymore. It's not where we've been 5 years ago. And being on the mainstream also meaning to be regulated. And I was in New York just last month with a few of my colleagues in eToro, participating in Consensus, which is the largest blockchain event in America. Just 2-3 years ago, the guys there were, young guys with long hair, not shaved like me, I apologize. This time, there were many people with suits, also bankers. So it shows that where the industry goes, and regulation is a part of it. We think it's a good thing if you do it in the right way, and if you do it in cooperation with the industry.
Are you considering to also apply for an e-banking license? Because at the M&A business, we are watching different movements. There are also exchanges who are buying banks, medium banks, small banks. You think in the near future we'll see some movement, like exchanges buying e-banking license to become crypto banking instead of exchanges? What do you think, guys?
I mean, I know a number of people who are trying to do crypto banks. They're doing it out of Puerto Rico, or they're doing it in Switzerland or Gibraltar or some of these other areas, and they're having actually a very, very tough time. I think one of the best things about blockchain or crypto is it creates new products or new opportunities. And these new products and opportunities, they're challenges for us, because when you innovate and you create them, as Doron said, you're not sure where it stands with the regulatory body. You know, even this new SLT that we created, it's like, does it fall under a derivative product? Does it fall under a token? Does it fall, where is it unregulated? Where exactly is it? But the most important thing for us is to have that dialogue with the regulatory body, to actually talk to them. And getting back to your question with the banks, I think we're going to be a while before we actually see that. What I see is that Facebook was good for us. These, like, you know, Goldman Sachs, Facebook coming into the industry is good, because it's bringing more, it's making the regulatory body kind of not be relaxed anymore and say, oh, this is kind of this noise in the corner and we just need to stop fraud. Actually, now they actually need to put rules around it to allow it to grow. And by having somebody like Facebook or Goldman or some of these guys come into it, they have to take it a little bit more serious, because there's real money behind it, there's some lobbying behind it, there's a lot more politically correct ways of doing business that's behind it.
So there's a couple of different aspects that you need to consider when you think about regulation. The first one is that decentralized, permissionless, peer-to-peer technologies cannot be regulated, period. And that's why I think it became apparent when Facebook announced Libra that the regulators immediately said, just stop whatever you're doing and come to Capitol Hill and we'll have a chat. And they're going to probably roast them live on TV. With Bitcoin, no government or no country or bank in the world can do that. And that is apparent. Secondly, although, let's say, decentralized, blockchain technologies may not be subject to regulation often, businesses that operate and interact with them and interact with customers do. And for example, money transmission is a very typical example. So Bitstamp was the first Bitcoin and cryptocurrency exchange to invest and decide and made a very conscious decision way back in 2014 that we will seek licensing and regulation in Luxembourg, in New York, and so on. It didn't look as the most commercially viable or smart decision at the time, but now I think we are seeing shifts in the attitude, in consumer sentiment, regulatory sentiment, banking sentiment. And let's face it, no one's going to take you serious if you come to the bank and say, we're accepting customer money, we don't have a clue who these customers are. You won't get a bank account, and secondly, the regulators will start paying attention because they will become concerned about their reputation if there's a garage business just, offering financial services without any control, oversight, transparency. So that's the shift we kind of foreseen years ago. And right now, I mean, when it comes to talking with regulators, we're already waiting for them, or we're already proactively discussing and talking and educating with them.
Can I just add one thing real quick, because I don't want to make this a regulatory panel, but everybody does, when they think of regulation and exchanges, they're always, from my opinion, they're always talking about the SEC, right? And the US is one of the largest markets for crypto. But there are other regulatory bodies around the world I just want to point out that we are working with, that the panels up here are working with, that are much more crypto friendly, much more open to be able to actually build rules and regulations around this. So I don't want it to sound like it's doom and gloom out there, but definitely the regulatory bodies seem to be stepping up these days and actually working with the exchanges or working with crypto companies. So
But also it's tax dollars, you know?
absolutely, absolutely.
I agree with all of them in some deeper level and disagree in some other more superficial levels. One thing is, I think it's nice for the industry, it's good for the industry to actually embrace regulation when it makes sense. But as Daniel was saying, there's new products, there's new technologies that do not fit this framework. So I think the industry also needs to have the courage to innovate legally and innovate together with these regulators. And we do have very savvy and tech people in the regulation bodies that can have this conversation. Regarding to AML compliance, which was mostly what Miha and Doron was saying, I think that's also a matter of us to prove to this more old mindset in the sense of the old financial system. How does blockchain or how does this new decentralized finance system matches or exceeds the requirements for this set of rules? Because even though we are decentralized and nobody in capital can send a letter to Satoshi, you still can do a lot regarding AML on Bitcoin, you know? So I think this same level of instruction needs to be on every regulator. And then we push forward. We really need new regulations, and we really need to prove, for example, when we talk about securities, security tokens, these can be or cannot be bearer instruments is a view that the local regulator will accept or not. Maybe it's just ownership reflection of the books that are offline. Maybe it's a true bearer instrument and a simple transaction on the blockchain is transfer of ownership. So it's really a case by case, and it's something that the industry needs to both comply and disagree.
Okay.
Could I add one short comment on this? My take on regulation and how it's going to affect the exchanges world, the crypto exchanges world, is like now we have hundreds of exchanges, hundreds practically. I believe that within 2-3 years you will have very clear distinction between two groups. The big ones that are regulated, that are embracing regulation, that are working with governments, and that put their money and their deeds where they say we want to be a financial institution, and they understand that in order to be a financial institution, they need to take certain actions and to behave in a certain way. And there will be another layer to which many of the existing exchanges will be a part of, which will say, hey guys, we don't want this game. We don't want to be regulated. We want to be always, we want to have 200 leverage trading. And this is the game that we want to play. And I think that for both, there's a clientele, right? So probably the governments, the banks, the institutions, the heavy investors, they will go with the first group. And many retail customers will go with the second group. And I think this is where the exchanges world goes in the context of to be regulated or not.
Okay, in addition to the regulation, there are more players who are coming into the crypto space, into the crypto exchange space. An example, Bakkt or Six, the institutional level. My question is, it's going to be my last question. Will these players grab a greater market share or not? What is your opinion?
I think no. I think they will not play current players and neither new innovative players. I think they will actually expand the market. So when you think about who is backing or who is trying to push these guys, they are not big players right now in the crypto industry. So they are already expanding the market in such a way. And I think this is actually very good for crypto. When you see about it, we are talking about an industry which has about 40 million users in total, right? That's very small. When you think about Instagram, it has almost 2 billion users. So we have here a 200x growth opportunity. So whenever we get new players like this, I think it's much more plausible they will expand the market than capitalize in the small market that already exists.
When it comes to newcomers and new exchanges and competition, we at Bitstamp, for example, always welcome competition. I think competition is good. I think this space and these markets need less systemic risk. And you only can achieve that with having multiple stable, large exchanges and smaller exchanges, providing liquidity and basically being that network that is the baseline for the entire kind of crypto economy to grow. Secondly, all these newcomers, and I've been saying that time and time again, it looks great on paper, it sounds super sexy and flashy in the newsreels, but I haven't seen a single Bitcoin volume from them. And let's face it, you're not an exchange if you're not doing volume. So first, let's see some volume, and then we'll talk. Secondly, cryptocurrency, blockchain, however you want to call this space, is a grassroots movement from day one. And as such, it was never imposed from above, it was always something that came from below, up. And this retail, we call it retail demand, is what got the institutions going, because they realize that their time is up, and if they don't figure this one out, someone else will do it for us. eToro will figure it out, Bitstamp will figure it out, other exchanges will figure it out, and we will eat their lunch, and we mean business.
I come from the FX industry, and when I say the FX industry, I started on the buy side, meaning I was working for the big banks back in the 90s, and I remember I was one of the traders, and I remember seeing, the flow coming in, and the salespeople were fighting over the same customers because there was a certain amount of institutional customers. And then in the late 90s, suddenly the internet was able to allow retail traders to start to come into this space. And I quickly moved out because I saw this is the future, because there's this unlimited supply of retail traders instead of going after the same one or two banking customers. And if you guys are at all from the FX industry or know it, how much it exploded from, say, 2001 to 2010 and growing today. And I kind of cut my teeth all those years. And so when I look at the crypto side of it, I'm seeing now I feel like I'm back in 1999, 2000, where I see that there's this retail-driven market, and now the institutions are going, wait, I can make money off of this because I don't really have anything else to do. I've already burned all my bridges, or I already have these clients. This is a new category. So now they're starting to come in. So this is very early days, I think, for the institutions coming in, but they're smelling it, they're feeling it. I can completely see exactly this time period from 2000.
So my take on this is that the market grows by definition. We're not fighting over the same customers, but at the end of the day, it depends on the offering that we have, on the products that we supply. In order to have more users, more money, more trades, more success, we need to offer exciting products. So trading Bitcoin versus Ether is nice. It's not really exciting anymore. What we are trying to do in eToroX, and this is how we try to expand the market and to get our customers, we have a strategy of launching more and more tokens, our tokens. So, for example, now we have 12 tokens, 10 of them are fiat pegged, 2 are commodity pegged, gold and silver, and within the next couple of months, we'll have more and more coming. So just imagine a customer that can trade 24/7 his Bitcoin for €, then change it to Swiss franc, then go to Chinese yuan, then buy gold, then go to maybe Amazon X. This is exciting. This is a whole new world just waiting for us and for our customers there. And I think that these kind of things, they will drive the market, especially when they are done in a regulated way. So people know that their money is secured, that they don't need to be concerned about what they are doing with us. I think this is where the world is going, and I think this is what will drive more customers to start doing this kind of operations.
Thank you, guys. Unfortunately, we have to finish the panel. There are 2 minutes more for 1 or 2 questions. Please don't be shy. The microphones are there, okay. No questions? Okay. The microphones are there. You don't mind to stand up?
Hi, to the guys with the exchanges, what sort of trade surveillance are you guys doing? And like, do you publish any of that? Quite transparent.
Trade. So the question was, what kind of trade surveillance on the exchange? I assume for like monitoring for pumps and dumps and fake volumes. So we actually, as I mentioned before, our technology partnership with Nasdaq, we actually use Nasdaq's surveillance system that they use. This is used in about 70 other exchanges around the world, and a lot of the government regulatory bodies actually even use this themselves to monitor trading activity on the exchanges. So we're using an institutional, already known surveillance system to monitor the trading activity on DX.
Very similar to that, we also at Bitstamp, we use Eurasium, so industry-grade technology staffed by experienced people who've been doing that role for closely 2 decades in other financial institutions. So again, the perception today about cryptocurrency exchanges, I would say, is correct in saying that there is a lot of shady and potentially illegal activity happening on those markets. However, that being said, there are a few exchanges that stand out from the crowd when it comes to transparency, oversight, and fairness in orderly markets. And this is, I think, the key differentiator.
You know, I wasn't going to bring this up, but you know what's interesting for me is, this is, as far as I know, this is the first industry that really cares about volume. And I understand that it's really important to have liquidity. But when you look at like FX brokers, or if you go to somebody like an E-Trade or a stockbroker, you're not looking at what the volume was traded. You're just looking at what the price is and let's trade and can I actually execute a trade. So it's really ironic for me to see that. Why does crypto care so much what volume is there?
I think it's
right?
a marketing play.
Perhaps, but it's amazing how much emphasis is put on what kind of volume are you doing. It should be more about what product do you offer? Are you regulated? Are you doing the right things? What's your KYC? Do I have liquidity? Yes, but what's behind that, right? So it's, you know, I think people should stop worrying about this volume. I mean, if you look at CoinMarketCap today, most of those guys aren't real anyways. We all know that, right? But they're still there. But again, I don't know. To me, I don't understand what the infatuation is with the volume.
Just before we move on, we wanted to get on the question. I think, again, technology is important here. So, for example, Nash is non-custodian, and we have a protocol for trading. So it is provable fair by the workings of the protocol. So a lot of the problems that you have when you are a centralized exchange, that you need to deploy some types of monitoring tools and auditing and so on, is something that you can actually just do on the blockchain also. So the way you do monitoring is actually very dependent on your infrastructure internally also. So I wouldn't say there's a silver bullet for every exchange, and every exchange will adapt different tools for this kind of solutions.
Okay. Sorry, we have to finish. Okay, thank you, audience. Thank you, panelists. Thanks for coming. Have a great day. Thank you.